Okay, folks, welcome to Sunday Night Futures Live. Welcome to a new trading week, and it's great to be back. We weren't live last week. I had a little bit of surgery. Every day is a good day, nothing major, and we're getting better on the road to recovery. So we have the new week open here, and we're going to kick it off with the NQ. We're going to be talking a lot today or tonight about the credit markets, what's going on out there. Every major bubble has had some sort of a credit event that accompanied it. So perhaps not COVID, although you saw delinquencies rise back then. But we're going to revisit that tonight and see where we stand at current. The results are going to be pretty interesting. So let's begin here with saying, let's say hello to folks. We have Kathy Hussein. My guess is that it's Pete Hussein using his wife's computer, his wife's ID, one of the two. Either way, welcome, Kathy. We need more estrogen. We have way too much testosterone here. We need more estrogen, so welcome. If I am wrong, and that is really a Kathy Hussein. We need more females. We need to broaden out and diversify the audience. Sean, welcome. Good evening to you, my friend. Miser, welcome. Good evening to you. Your opinion on VWAP trading? Oh, God. I think so, and I know there's going to be a lot of hate that comes at me for saying that. I'll put it to you this way. I've tried it. For a short-term trading vehicle, I think there are a lot of eyeballs looking at it, looking for a bounce off of it. I prefer my historical support and resistance levels and trend lines. I'm sorry, I'm old school. So while many people may get a lot of value out of it, I don't want to knock it. Perhaps I didn't give it enough of a try. To me, I think it's over-exaggerated. That's just my take. I'm sticking to it. Danny, welcome. Okay. So we have the NQ opening up. This is the NASDAQ 100, the futures version of it anyway. We have a 15-minute downtrend channel, upper band in purple, lower band in purple. We have a higher low. We also have a breakout above this upper band of resistance. So I already drew this support level alert here. I want to know if we fade. Why might we fade? Because we did the same thing. Breakout late Friday, failure late Friday. And we'll see whether or not we can get a higher low. I have a higher high. And we could take out the highs of Friday afternoon, or do we continue the trend? Right now, this could still be a bull trap. Taking a look at the E-minis. E-minis looking good here, up the same as the NQ, 0.17%. We'll just set up an alert here. We will try to set up an alert. There we go. And we'll set an alert here. All I care about right now is, do we put in higher highs or do we put in lower lows? It's very, very basic stuff. Let's check in with the RTY. That's the Russell 2000. Looking pretty good here at the open. Russell opening up over, or was it 1/3%? We did have a nice rally into the close on Friday. They're driving the Russell up here. Let's go to the next resistance level. And we will create an alert there. I also want to know what the heck just happened. I also want to know if we take out this opening bar here. But at the open here, I'll tell you, we're back over 1/3% up on the Russell 2000. Let's check in with the mid caps. They're opening up nicely, a bit better than the NQ and the ES. We're going to do the same thing. I want to see if we get higher highs here, which technically we already have on the 15-minute chart. Second time tonight. We're right at resistance now on the mid caps. Let's go dollar. Go to currencies. The dollar opening up down here. No great surprise. Had a good week last week. A little bit of a pause is to be expected. Let's check out the Japanese yen, which is very, very weak. Let's go to a weekly chart. Let me illustrate. It's been I don't know what's going on here. Third time that happened. It's never happened before. Japanese yen has been very, very weak. No new weekly lower lows. If we break the support level here, I mean, this is critical support. We can head all the way down to this level here, 0.0064. Let's check in with euro. Euro opening up higher. I don't think it holds it. Frankly, I think what's going to happen here, I think that the dollar is going to recover. You're going to get weakness in euro, perhaps consolidation on yen because we're at historical support. But the way that long-term yields closed on the month and on the week last week, they closed on the month. They closed down fractionally off their lows, pretty much like a doji star formation, a sign of indecision. On the weekly chart, long-term yields, 10-year, 30-year yields, they look like they want to go up. So that's bullish for the dollar if that happens. So now we know what currencies are doing. For comparison's sake, we looked at the weekly chart of euro yen. Here's the dollar last week. This is last week here. So a very solid week. It was a breakout week. We're just testing right now, a little bit of a relaxation. I think we're going to follow through. I think we're going up. So what does that mean for commodities? Well, let's see how gold is opening up. We'll go through precious metals, then we'll go through energy. Oil should be up. We have some news on oil. I'll get to that in a moment. So we have gold up just shy. We're back above 4,000. Do we hold it? I don't know. It's been pretty weak. It's still overbought. You have RSI on a monthly chart of gold still above 90 despite the sell-off in the past week or so. Silver up 0.15%. XRP down 1.32%. Let's check out the weekly chart here. Yeah, you can make the argument that this is a bear flag setup. But the thing with technical analysis is it's through the lens of which you choose to look at the chart. So you got to keep an open mind. I could make the other argument that we are setting up for a potential breakout. Just the way you draw your lines. You just got to keep in mind the probability at which the underlying, in this case, XRP will go. And the way you hedge your decision making is that you say, okay, what's the trend? Is the trend still up or is it down? Because the probability is that it's going to continue with that trend until it stops. So right now you can see that XRP is put in lower highs weekly time frame. At best, it's consolidating. At worst, it's breaking down. Bitcoin opening up over a 0.5 percentage point here. I want to stick with the weekly view for a moment. I want to get a vibe for how we closed out the week. We did not close well. We closed below a support level. At current, we're attempting to gap up to recapture. We don't know if it's going to close here, right? It looks good right now, but we don't know how it's going to close on Friday. Let's segue over and into, sorry about that noise. Let's segue over and into energy. Let's go back to let's go to a 15-minute chart. CL open. Yeah, so light sweet crude gapping up. There's a report out of OPEC over the weekend that the projected increases in output have been scaled back. So that could put a bid under oil. You had some attacks on Russian refineries as well by the Ukrainians. We have natty gas opening up here. Well, it's really volatile. It's really moving around right now. They gapped it. Wow, they gapped this up to 4.2. They're going to fill this gap here. Right there. Bump. We do have a long position here in natural gas. Last week was a very bullish week. Okay. Let's take a look. Let's pause here and take a sip of water. Let's say hello to folks. Lee Cable. I don't know. I don't know. I'm confused about Bitcoin. The reason is this, is that you have had pretty much a very, very tight correlation between Bitcoin and equities, right? So for many, many years, they wanted to say that Bitcoin was the new gold. I always said it wasn't. And I always would take out a chart, a ratio chart, and I would show you they trade in tandem. Equities and Bitcoin move up together or move down together or say trade sideways together. Whereas with gold, it does its own thing. Usually it trades inversely of the US dollar. That really hasn't been the case right now. The one time that I thought that Bitcoin may be breaking away from that traditional pattern of trading with equities was this year. During one of the sell-offs, you saw that Bitcoin rallied while equities went down. Big divergence. And I attributed that to the money flows into ETFs. So I think that the test with Bitcoin is going to be when this very, very overvalued market gets sold. What does Bitcoin do? Does it become a safe haven asset, a store of value such as is gold? That's yet to be seen. It's done it once. We'll see whether or not it could do it again. So I don't know, to answer your question. I think it needs to be tested. Yeah, it looks that way, especially the small cap stock, Scott. I knew it. I caught the vibe. TZ, thank you very much, TZ. Open earnings on Thursday could be positive. Keep an eye. Ethereum, my studies are showing that we could have a very strong rally into the year. All the big things. Okay. Jody, welcome. Talon, hey brother, how you doing? Any rally in Ethereum couldn't last longer than Q1 2026, and we should head into a 4-year cycle low. Okay. All right. I wanted to keep this chart of natural gas up here. So they're going to try to hold this gap. They probably took out a bunch of stops, and now they're trying to take it back up. I have an alert set up here. We'll come back to this. I don't want to keep staring at it. Let's check in with live cattle. Since the last time I did a live stream, live cattle, which we've talked about quite a bit, has paused. In fact, fourth time tonight. In fact, I shorted live cattle twice. We did well with it, but I couldn't hold it overnight. It's just way too volatile. I'm not the type of guy that can hold futures overnight. So it rallied off the lows of the week. I think that this fails. I think that this is going to break lower. So we may be looking to sell short live cattle again, but ideally on weakness. Let's go to the weekly chart. Oh, wheat, really nice move here. What happened here? What chart am I looking at? It's showing down. What, did we get a new contract? No. ZW wheat is showing is down, but it's up. Okay, that doesn't make any sense. All right, so wheat looking really good here. I want to go to a 4-hour view. Do we have higher lows? Yes, we do. Let's go to the weekly chart. Wheat looking really good. Really, 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 really good. Okay, looks like we have an ag trade going on here. Short live cattle, long wheat, corn, dead money, avoid. Soybeans. Wow, look at the week on soybeans last week. This is on the China trade talks. That was very soybean friendly. I wasn't even thinking about the trade. Again, I'm not going to carry these futures overnight. Just way too volatile. Fifth time tonight. What else did I not go over? Let's take a look at volatility. Volatility is probably getting killed right now. Sixth time tonight. Okay. Great show. Not too bad, honestly. NASDAQ not capitalizing on that gap up at all. In fact, it looks as though you're getting a little bit of selling pressure coming in here. A little bit, not too much. So we have our alerts set. Let's get to the charts and the rest of the show. Okay, I want to begin with, we have so much going on. We have, this is the current website. That's me. This is all going away. I mean, everything, front end, back end. It's been a heck of a job. It is going away. Soon will be replaced with new platform. Our partnerships with TrendSpider will continue and will grow. It's going to be a very, very exciting new experience for members. Prices will be going up for new members. Existing members, no price increases, but a lot's changing, a lot more value. And if you want to lock in current pricing, sign up now, take advantage of it, because we have a soft launch date of ideally December the 1st, give or take a few days. You know how things get pushed back. But if you can put up with the construction woes on the back end of the website, it'll pay off longer term. So take advantage of it, and I'll see you on the other side. Also, TrendSpider. The partnership is going to remain alive. If you're not ready to join my service, because I give TrendSpider away free to our silver and gold level memberships, you're not ready for that? Fine. Use the link below and get a 35% discount. As a matter of fact, do they have a Halloween special? Sometimes they get better discounts than I give. Oh, wow. They're doing 45%, 55% on advanced, 45% enhanced, 42% on premium, and only 5% on standard. If you want the standard, use my discount code. I get you 35% off. Every other level, use their discount. Just use the link below on YouTube, link above on Twitter and Facebook, or X. Sorry, X. I'll get it right eventually. Okay, let's get to it. Let's talk about this coming week. We have durable goods coming out on Monday. So important number, durable goods. Consumer confidence on Tuesday. What else do we have? FOM. Oh, this is last week. This is last week. That's a first. Okay, let me begin that all over again. It was like Groundhog Day for a moment. ISM manufacturing survey coming out on Monday. Manufacturing PMI. Factory orders on Tuesday. Job openings. Watch that. It's a jobs week. We have ADP coming out on Wednesday. That's a jobs report. Thursday, we always get the weekly report, but the Pimp Mac Daddy of them all is coming out on Friday. Non-farm payrolls. Watch it. Very, very important numbers coming out this week. Earnings on the week. We have a lot going on. Usually Monday is a quiet day. Not this week. We get Palantir after the close on Monday, kicking it off. Tuesday, Uber pre-market, Shopify, Spotify, some energy. Ferrari race, they had a bad quarter last quarter. It's very, very rare. It's a very well-run company. After the close on Tuesday, AMD, Supermicro. This is going to give you a glimpse into NVIDIA's earnings. They're a big customer, one of the biggest customers of NVIDIA. Wednesday, before the bell, Humana, McDonald's. After the close, HUD reports, AppLovin, Qualcomm, ARM, Thursday, more energy pre-market, more biotech. After the close, we get open, DraftKings, Airbnb. That stock's been moving. Friday, Constellation Brands, American Axle, more energy. So it's going to be a very, very busy week for the entire market, S&P 500. So buckle up. It's going to be an interesting week. Let's talk about valuations as we begin the new trading week. We close out the month for the first time since 2000 with a 40 handle on the Shiller PE ratio. The Buffett indicator, we remain strongly overvalued despite the earnings that have been reported thus far. We are still strongly overvalued. How overvalued? 217% beyond the GDP of the United States. That's the total stock market. We remain again above a 2 standard deviation move. We're pretty much at all-time highs on the Buffett indicator. And when you take a look at this model on a price to sales basis, it gets freakier. Price to sales ratios, we're right at all-time highs. But when you look at S&P to sales per share, we are at all-time record highs on price to sales. So, I mean, 2000 looked like a cakewalk compared to where we're at right now. Now, I always like this. This is the combined trailing PE, the forward PE, the CAPE or the Shiller PE, price to book, EBITDA, Q ratio, market cap to GDP, all combined to do an average. Where are we at? We're just off of 1929 highs. Pretty scary stuff. So understand the market that you're trading, okay? This is not a market that I would say, let's initiate new bull trades with the exception of some short ETFs, to be honest with you. Can you trade the momentum rally? Yeah, sure. Use a trailing stop loss order. Let the market take you out. But if you're going to initiate long positions without a exit strategy, you're playing with fire. I've been here before. I've been through 3 bubbles. It ain't pretty. Just when you think it can't go any lower, it goes a lot lower. So the inverse is true as well. We could take a look at a chart right now, and we could say, God, this market can't go up any higher. We're up 50% since April. How is that possible? It's possible. We can go up higher. We've done it before. Federal Reserve. So going into last week, the probability of a December rate cut was almost 90%, almost a surefire guarantee. Now it's only 69, let's call it 70%. So the probability of a Fed rate cut has dropped dramatically. So it's still strong, it's still probable, but they're no longer pricing out as far in the future 100% hike probabilities. They're reducing those probabilities. Now, I want to talk about delinquencies. I mentioned this earlier that you need to watch. There are markers for a bubble, stock market top, whatever you want to call it, whatever you want to call this, everything bubble, I don't know. But we saw what residential mortgages did back in 2008. And while clearly there's no house on fire here, so this is not a repeat of 2007, 2008. I never said there was going to be a mortgage problem. In fact, I don't believe in the mortgage catastrophe that's supposedly out there. I still think that you have pockets of strength in the residential mortgage market. Do you have some correction? Yeah, sure, but it's part of the process. Florida is in a correction right now. It's a great time to probably buy there. I haven't checked whether or not we bottomed out, but you get pullbacks. So, I'm not worried at all about a mortgage crisis, but I will point out one thing is that when you take a deeper dive into the mortgage market, the delinquencies are beginning to rise, but still, there's no fire here. However, when you drill down a bit deeper into the consumer, you start seeing bigger problems here. Delinquencies on credit cards are very, very high. They're at their highest level since 2010, when we were coming off of the financial crisis. So clearly the trend here is higher. We have broken out. The trend has gone from down to bottoming to now up. Delinquencies are rising. You're seeing it in the used car market. We've been seeing it for years. The banks have hit it. They're sitting on a ton of unrealized bad debt. But the Federal Reserve is probably going to bail them out yet again. Now, when you take a look at this chart here, I could have just not brought this chart up, right? If I wanted to be hyperbolic and try to scare people into believing that the stock market's going to crash tomorrow, there is no hope, doom, 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 I could have just brought this chart up here and said, you know what? We have in dollar terms, the number of delinquencies on loans and leases, very, very high relative to the bubble in 2008 and the subsequent decline. But we got to keep a couple of things in mind. When you're talking about dollars, you need to adjust for inflation. Okay, so the same dollar back here is not worth as much as it is here, right? So we want to be intellectually honest. And we also want to point out that the percentage of bad debt is nowhere near where it was during the financial crisis. So we want to keep an eye on the ball, but we want to also not look to support our thesis that the market is overvalued and should go down. We don't want to look at the charts that help us feed our ego. We want to look at take an honest view of the debt market. So while it's coming under strain, it's not quite that bad yet, but the risks are rising. Will continue. And the reason why the risks are rising, there are a couple of them. One is that the Federal Reserve's balance sheet, which rose, declined last week. So what does that do? They're net sellers of long-term treasuries, 10-year, 20-year, 30-year debt, or paper, as they call it. So what does that do to yields? Sends yields up higher. So they're adding supply to the market. The market's not able to absorb it. Therefore, yields go up. Then you take a look at the 10-year yield monthly view. I mentioned this earlier, that on the month we had what you call a doji star formation, basically a sign of indecision, almost insignificant to move on the month, very, very minor. The problem is this, is that the Federal Reserve really began to cut rates back in September of 2024. Then they paused, and then they just began them again, not this month, the prior month. That was back here. So we ended the month at 3.76% on the 10-year yield. We've had 1.5 basis points of Fed funds rate cuts. Where are interest rates now? They're not lower. They're higher by 8.33%. So if you have the Federal Reserve not willing to increase its balance sheet as they did during COVID as they did during the financial crisis, well then, this is going to get resolved probably up until such time as they decide they're going to come and bail out the system again. And when you take a look at it on the week last week, well, we kind of broke out. We closed just off the highs of the week, momentum hooking up on RSI Stokes. So I think that yields are going to press up higher. Let's see where they're opening out. They're down at current. This is a 4-hour view on the 10-year. I'm viewing this as a bull flag setup. I'll show you what I mean by that. There you have it. So we have so far on the session reversed off the lows, still down relative to the close on Friday, but I think yields are going up. What problems does that cause? Well, U.S. bank reserves are literally in free fall. The level is now at the lowest in the past 5 years, the lowest in the past 5 years. Remember what happened in March of 2023, the regional bank crisis. All those banks, more banks went boom within a couple of months back in spring of 2023 than did all banks during the financial crisis. The Federal Reserve came in. Here, I'll show you. Right here. That was less than 5 years ago. So fast forward, here we are now. So liabilities and capitals, other factors draining reserves, balance sheets at their lowest levels in, he has this marker. I don't know whether we're below. We're definitely below. We're multi-year lows here, far beyond 5 years in all probability. So the banks, the regional banks, are in a lot of trouble here, yet the Federal Reserve is still selling debt, allowing yields to rise. That is death for the regional banks. More signs of credit risk. These big players in Silicon Valley, they're doing this OpenAI trade here. NVIDIA is selling to OpenAI. OpenAI doing business with Oracle. OpenAI has about 1.2 or 2.3 billion dollars. Trillion, $1.3 trillion worth of deals. They don't even make that money. Nowhere near that money. That's all debt. They're hoping these companies are going to collect on that debt. This is the same type of vendor financing we saw back in 2000. Sun Microsystems, they were all selling servers to these .coms. Vendor financing. They couldn't get paid. Everybody went belly up. Same thing. It's the same game. Players are different. And here is the outcome of this bank problem. The Federal Reserve has officially injected $29.4 billion into the U.S. banking system overnight. I'll tell you, they're a lot quicker than they were back in 2023. So the Federal Reserve, as we speak, is bailing out. They are bailing out the regional banks. And here is the regional bank ETF. This is going to get resolved one way or the other. Either we're breaking down hard or we're breaking out strong. I think that we're going to break down pretty hard here. It was not a good week for the regional banks. We closed down on the week on volume. To be fair, I'm sorry, this is a monthly chart. So we closed down the month just off the lows of the month on volume. To be fair, the daily view on Friday, we have a lot of support here. This is the value of the automated trend lines. Automation, folks. The new website is going to be a lot about automation. So these support levels, bailed out KRE. The question is, can they continue to do so? And here is the Fibonacci retracement. We failed to hold this retracement here. And we're testing a retracement level as we speak. Watch the regional banks very, very closely. And if you take a look at the staples, last week were just utterly annihilated. They were in a downtrend channel. You could call it a consolidation, if you will. They had broken out several months ago. They had a head fake breakout. That's all gone now. This is a failed breakout on the XLP. The consumer staples are in lots of trouble. They broke down very, very hard last week. So be careful of this market. Be very, very careful. Because when you take a look at the S&P 500, this chart here is the S&P 500 percent of stocks trading above their 200-day moving averages. You have only 56% of those stocks trading above their 50-day moving average. S&P 500 is just off of its all-time high. What's wrong with this picture? Without telling me exactly what's wrong with this picture. So not a good close last week for the underlying strength of the S&P 500. In fact, here, you want to take a look at a big divergence. Let's take a look at the triple Qs weekly chart, up 1.94%. Good week, right? What's wrong with that picture? Here's what's wrong with it. QQQ is a market cap weighted basket. So who influences it? Microsoft, NVIDIA, Apple, Amazon, etc. The Mag 7 names. So let's take a look at the equal weighted basket. All stocks being equal in the triple Qs. So let's bring up QQEW. So before I click enter, QQQ is up 1.94% on the week. But the basket of the QQEW, the equal weighted, was down over 1/3%. Volume was light though. So this is our market in a nutshell, folks. So before we go to stock chart requests, let's go to comments. Yep, couldn't agree more. Yeah, I firmly believe in it. Gold is gold. Yeah, I mean, yeah, people whistling past the graveyard right now, because when this goes, it's going to happen like that. That's why if you're long, fine, it's okay. If you have speculative positions on, at least use a trailing stop loss order. Let the market take you out. Trust me, you'll be happy. Here's what's probably going to happen. Here's what happens usually when I get stopped out. I get stopped out, the stock bounces back. And the immediate knee-jerk reaction is, God damn it, I should have stayed in. And then all of a sudden, it drops like that. So let the market take you out and stay out. Watch what unfolds. Sit in cash. It's good. If it's good enough for Warren Buffett, it's good enough for us. Could have sworn I had Warren Buffett's cash pile. I thought I had it up here. I don't. Oh, here it is. Here. He's sold over $184 billion worth of stock in the past 3 years. So whenever you're hearing these lunatics on CNBC rationalizing valuations right now, we've heard all of this before. We've heard it all before. When you take a look at these guys on CNBC, they are sponsored, well-dressed, slick-back-haired cheerleaders. That's their job. And if you listen to any one corporate executive, CEO, they are really the salesman of the company. If you happen to get the CFO, the chief financial officer, in an interview, listen very, very carefully to what they have to say. Those guys, they have to be as black and white as possible. And that's why you rarely see them out there talking. So there's your picture for the week, folks. In all probability, we're going to move up higher. We're doing so on thin ice. We have more earnings to goose the market up higher. Unlike last week, we did not get the big gap up in the equity markets like we did last Sunday night. We have delinquencies on the rise. We have the Federal Reserve behind the scenes bailing out regional banks again. And maybe this will never come to fruition, this regional bank crisis, but maybe it does. So watch private equity. And I don't know how you watch it because it's private, but there apparently are a lot of people swimming around out there with plenty of debt, highly leveraged, and the tide is going out. And that's why I think you're seeing old man Buffett sitting in his stockpile of cash. He knows what's coming. Let's get to chart requests. So the way I'm going to be delivering, because I'm not going to leave people out there in the lurch who have opted in and joined the community. I'm not going to. I'll talk about it here on YouTube, but I'm not going to have it on our pricing page. I'm not going to have a free version, but it's going to be a portal to get in the back end, so you can enter your one chart for the week for Sunday Night Futures Live. So I'll probably have to cap that out, maybe a 10. So if you're currently on our free list of entering your symbols here, don't worry about it. I'll be communicating with you. You'll be invited into that free area, and you could still participate in Sunday Night Futures Live. So let's go to our requested symbols. If you have not already joined up here, anybody that's on this show could tell you it takes 2 seconds. I don't ask for a credit card. And we will go to the charts. Okay, let's go back to candlestick. Let's clean this up. Nugget for Sean. Okay, so I find myself in a very unusual place with Nugget. So we sold 2/3 of our position here between the week of the September the 29th, I believe. Maybe it was the week before that. I don't know. I don't remember. And up here, we sold 2/3 of our position. And we still sit with 1/3 of our position. Do I want to buy back in? Yes. But the dollar's strong. Gold is still very, very extended. We had a nice reversal week last week. Do I think that's the bottom? I don't know yet. I don't know. I think that we're going to need to consolidate here a bit, perhaps even fail and take out this low. Let's check out the automated trend lines. Now, if you're using the automated trend lines, they're telling you that we could, in all probability, head all the way back down to, this is rising, so maybe 110 per share. And that's a big drop from here. But if you put it into context, we were as high as 190 3 weeks ago. So from a close of 132.86 down to 110, that's not unreasonable to expect. So I'm not a buyer here. I just can't be. I want the shares to come to us, right? So if we can get a pullback to that 110 mark, that's probably where the support level will be. weekly time frame. We'll buy back. But we're not going to add all of those 2/3 back again. We're going to begin to pyramid up, right? Build our position on strength, on validation, not on the hope that it's going to hold that support level, because it may not, right? And if we go into a deflationary or a disinflationary period where prices stabilize or go down, you don't want to be a buyer of nugget, gold, silver, because they're going to go down. You want to buy them in a stagflationary environment. Rising inflation, stagnant growth. And we'll keep this active for a little over a month. So our alert is set. What's the other one? SILJ. SILJ is a tough one. I still think that silver can move higher, but SILJ, oddly enough, doesn't trade with, as you know, Sean, I talk about it all the time, doesn't trade with silver. It trades more with the gold stocks. So while it may have less downside, it's probably going to continue to trade with the gold stocks, unless, of course, silver just starts having a rip your face off rally and the silver miners diverge, which is possible, but it's not the rule by any stretch of the imagination. So weekly chart, we don't have much automated support here. The monthly chart we did, we bounced off of monthly automated support. Again, I didn't draw these lines. That's the algorithm. I'm just goofing around here where I would imagine support to be. I think it's going to be here. The intersection of support at 1919 and the rising lower band of support on a weekly time frame. So while we closed out the week up and off the lows, I'm not sure that we're out of the woods yet here, especially with, let's bring up, I haven't brought up these stochastics. They're still above 50. So maybe they do recover. It's possible. But I would want to see a 19 handle on SILJ. Right now, I'm a little bit shy to re-enter these names that we're out. We made our money. We booked our profits. I don't want to go running back in and have a rug pull. I'm just very, very cautious of that. Actually, SILJ, we didn't sell any here. I'm thinking GDXJ, which is another, that's the junior gold miner ETF. We didn't sell any SILJ. We took 2/3 profits on GDXJ and NUGT. So I wouldn't go adding more here. 1919, maybe. UNH for Lester. I didn't read their report last week, but it didn't sound good. The stock is still cheap. I looked at it over weekend. I want to re-enter. We booked profits up here. I didn't like the way it was trading. It stalled out, and we had earnings coming up. So I said, you know what? First out, best out. And I'm glad we did. That being said, it's still cheap on a historical basis. I think it may be at support now. I mean, you have a bunch of support levels here. These are my manually drawn ones, and they're pretty good. So we may press lower. This is a pretty bearish candlestick. Maybe 331 around there. I would entertain if on a daily time frame. Let's go there. If on a daily time frame we do break and we head down here and we consolidate and we build a base, then I would begin to rebuild the position, pyramid up on strength, meaning add more on strength. Right now, we made our money. We just now we do want to watch for the re-entry. We're not buying the stock. We're buying the setup, right? All too many people, they look at a chart and they see the stock has come off of its high and they're saying, wow, I'm getting a deal. Maybe, but it could still go lower, right? We're at support right now. For all I know, this is the bottom. It could be the ultimate bottom for all I know. I don't see the setup yet. The best we have is that we hit support. Volume is low. Is that a reason to put on a couple of share position? Okay, very, very small. Fine with that. But remember, the weekly chart is very weak. Bearish reversal bar. In essence, what we did last week is that we put in the context of this bear market, we put in another lower high. That's got to stop. Now, if we break out above this resistance here, game on. I'm buying it hand over fist because we're buying right. We're buying on strength. We're buying on strong up volume. Now's not the time. Gold. I got to bring this up. I mentioned this earlier. Here's the monthly chart of gold. Big topping tail. And if we take off, I already took off Stoke. Let's bring up RSI. Take a look at how overbought we are. I'm going to call this 91. I think this is a bit high, but 91 on gold RSI. It's pretty overbought. And it is just off of its third standard deviation Bollinger Band. Now, in the back of my mind, there is a plan here. So would I be a buyer of gold right now? No. Did I sell gold? No, I didn't. It's always about the trend. It's always about that lower band of support. We're not at it. We had a parabolic move up higher. We can rally here for a trade. I'm not going to deny you that. We could certainly rally for a trade, but I think it's going to fail. I think we're going to roll back over. You're going to see some profit taking, and we're going to retest this lower band of support. Volume was very heavy last week for the second consecutive week. So that's institutional distribution. You don't want to fight these guys. Sit, watch, wait, patience. Buy the setup, not the stock, or in this case, a commodity. We don't have a good setup yet. Tesla, we bought Tesla last week. Not a big position. So Tesla looks very good here. It broke out, had horrible EPS, but they're rallying it on the robo-taxi and autonomous vehicles. Okay. I'm old school. Unless forced, I'm probably never going to get into a robo-taxi. But that's just me. So we don't have much in terms of overhead supply here. I think it is possible for us to go to new all-time highs, but if you're going to initiate, use a trailing stop, 5% trailing stop, let the market take you out. You know, if we break down below 440.31, I would stop out there. I wouldn't wait for 5% because this breakout would have failed. So Tesla, I'm long of it. Short-term bullish. I think it's going to go up higher. Good close on Friday. Okay volume. I think it could rally probably up to 536. We can get another $100 out of this. So I'm going to stay small here, and I'm willing to add more, but only if we break out to highs above, let's call it 470. I would add more. And then if we break out and above all-time highs at around 490, then I would get pretty aggressive, because you're going to have a lot of hot money rolling in there now, and they're going to take it probably up to the mid fives. I think that's where it's going to go if we do get the breakout. So Tesla, bullish on. And that's it, folks. Thanks for being here. Like, subscribe, you know the deal. Don't forget, again, as a reminder, I'll repeat this until we launch the new site. This site's going away. Brand new members area, all new features, all new functionality. Prices are going up because they have to go up. I paid a lot of money. And on new members after the launch. Until the launch, if you could deal with the back end glitches and creaks and cracks, sign up now, save a lot of money, and get all the benefits of the new membership. So take care. Have a great night. I will talk to you soon. Be well.